Welcome back, students who are taking financial accounting, and in this series of videos we are working on the chapter 4 short exercises that were assigned in the digital study guide. And before we get started, as usual, if you work through the problem in the textbook and you look at the answer and you don't have the right answer and you can't figure out what the answer is, how the answer is arrived at, and then obviously you're watching these videos. But remember, these videos in accounting are very different from like videos for the math. In these videos for accounting, it's about understanding an application. So you can be watching this video and not understand the application of. The application is the easy, to a certain extent, the easy part. But if you don't understand the theory and the concepts behind the application, then no amount of work with the application is going to help you. So be sure that you understand the theory by going back and going back into the chapters, rewatching the theory videos. And if you still don't understand something, then contact an instructor, either email or telephone them. But realize that if you do understand the theory, then it's just a matter of what parts of it, how do you work with that understanding in order to be able to apply it. And that's where watching the video, then you'll see the aha moment and go, okay, that's what I did wrong. But if you don't have any idea what a debit and a credit is, or what a book value is, or what net means, then you need to go back and watch the theory videos and realize that accounting is cumulative. Okay, so you may have missed something from chapters 1, 2, and 3, even though you're working on chapter 4 that you don't understand. So, and instructors are here to guide you. So, take advantage of that, and call and speak with them. Right. So, in this video, I looked ahead, and I'm only going to do 4-9 and 4-10 because 4-11 mean we need to create an income statement. So that's going to take longer than a quick 10-15 minutes here. So let's get started with the 4-9. All right, it says here, let me get my pen. Right, it says here, suppose Paul's Hardware sells merchandise on account. The terms are 110 net 45 for $920. Cost of the inventory is $550 on March 17th. So it's on account, $920, the cost is $550. Peter's Hardware later received $290 of goods, the cost $175 as sales returns. All right, so we're talking about returns and allowances on March 21st. Customer paid the balance due on March 26th. All right, so since we're talking about a lot of dates, it's always helpful to set up a timeline, all right, so that you can see where you're at in the process. So it says here that he sells merchandise on account. So if he's selling on account, that means we're talking about accounts receivable here with terms. So that's on 3/17 that he makes the sale for $920. Later, he receives $290 as a sales return on March 21st. Then it says the customer paid the balance due on March 26th. Okay, so there was a $290 return, and then the remaining payment on March 26th. But now here's the gist: the terms are 1% 10, net 45. So what's 10 days from 3/17? Well, 10 days from 3/17 is 3/27. Right? So the payment here falls within the discount period, so there's a 1% discount that's being taken. Right? So the question says here, calculate the net sales revenue for March 2014. Well, we've already determined that the sales here was $920. Okay, but what are we talking about here? Net sales revenue. Well, net means less the sales return and allowance, okay, which a return of $290. And then also we have less a sales discount, okay. So the sales discount, now we're going to take 1% of the sale, but what was sold, how much was sold, how much was actually purchased or sold, we sold on $326. Well, $920 was what the original sale was, but then $290 was returned. So that ends up being $630, okay? And because the $290 was returned, so we take 1% of the $630, so we get $6.30. So that's our sales discount that they would be able to take. So less $6.30, okay? And then that gives us our net sales revenue, okay? And so the total of all of that is, let's see, 30 from zeros, that's 70. Let's see here, that's 15, 11, so that's $623.70 is our net sales revenue. Okay, so the key word here is net. Okay, when we're talking about net, we're taking our sales less our returns and allowances and our discounts. And even though this was an accounts receivable, just realize that purchases is the exact the opposite side of the same coin. Okay, if we're selling to somebody else is making a purchase. Let me erase this here. Somebody else is making a purchase for $920. They're going to have a purchase return and allowance, and they're also going to have a purchase discount, all right, for $630. And so their net purchases is going to be $623.70. Okay, that's going to be their bottom line. The difference being this is an accounts payable for that company, and for you, and that's an accounts receivable. Okay, so just realize that's two sides of the same coin. It works the exact same way. All right, that's just a little bit extra here. Now it says here for the problem, it says calculate gross profit for March 2014. Right, so if we're here at, this here is number one, knowing that the net sales revenue is $623.70, right, then if we want to know what our gross profit is, right, remember we have revenue less cost of goods sold gives us our gross profit, which is not net income. From the gross profit, then we take our selling and admin expenses, which then gives us our net profit or loss. Okay, so the question is asking calculate the gross profit right here, so we have to subtract out our cost of goods sold. Well, what's our cost of goods sold? All right, so less cost of goods sold. So what's our cost of goods sold? Well, let me erase a little bit of this to make it a little clearer. All right, so the sale was for $920. The cost of the inventory was $550. However, okay, so we're looking at cost of goods sold here, so $550, but $175 was returned, so less $175, which means there's the cost of goods sold is $375. So we're subtracting $375 from the $623.70, and that gives us a gross profit of $248.70. And that's gross profit. Okay, And so that's the solution for number 2. Okay. Notice, and the thing that just also popped into my mind is notice that, you know, all of this is on, you know, a lot of students, now that I'm thinking about it here, I actually had a student return a project today saying they didn't want to do it. Well, they couldn't do it, I should say. So I just want you to be aware that, you know, it was kind of like funny because they skipped over chapters 1, 2, and 3 in the financial accounting, and they did the rest of the subject, you know. And of course, they failed an awful lot, you know, and they retook the exam and then just got passing grades, but they haven't done the project yet. And just realize that I had said accounting is cumulative. Well, notice what you have here, all right? This here is all part of the income statement. You know, this is not a separate entity from what was learned in chapters 1, 2, and 3. Sure, chapters 1, 2, and 3 is about bookkeeping, but the framework and structure that you learned in bookkeeping, now you're starting to fill in that information. You're starting to add detail to those different sections. I mean, think about it. This here, you know, when you look at an income statement, you have revenues, less expenses, to give you a profit or loss, right? Well, what are we doing with revenue here? You know, this revenue is now expanded to look like this, okay? When you're creating your income statement, this whole thing will show up in the revenue section on the income statement. Never mind the expenses, okay? So it's not just a simple one little line item in revenue. Now, you know, it's kind of indicative of, you know, the student continued on even though they skipped doing the graded project and had to come back to it. But as they moved on, you know, they were getting failing grades, all right, because they didn't understand the previous information, all right. And I mean, if you didn't understand this, then you wouldn't know what all of this pertains to. Sure, the person would be able to work through it just like I did, but realize I'm just working through one section in the income statement, okay. And as we go forward in accounting, you know, that's what a lot of this is. You're just getting into more and more detail. But if you don't understand, if you don't have a framework, you don't have an understanding of the overall scheme of things and where to plug this information in, you're always going to be at a disadvantage. All right. So I thought I'd get through 4-9 and 4-10 in this video, but apparently, you know, I'm up to 13 minutes because I've kind of spent 5 minutes of it talking about other than this exercise. So I will see you in the next video for 4-10.